Good morning, everybody, to the Friday session of the Business for This is the second out of 3 webinars. We will wait a little bit until maybe some other people show up, and then we'll start our presentation in a minute or so. Welcome, everybody. We're waiting for a few attendees to virtually show up, and then we will start. Good morning, everybody. Welcome to the Business for webinar. This event is intended to be our annual showcase of students, faculty, professionals, and traditionally is also been our annual CPE event. I would like to start today with an update of the actions that the accounting department has taken during the last 12 months. Of course, they are the consequence of a continuous effort that is beyond a year, and it will continue in the future. Up until last year, we experienced a trend of healthy growth in our core accounting programs, continue to be the Masters in Accounting in its various modalities. Master in Accounting, Master in Taxation, Accelerated Master, etc. And our undergrad accounting major, as well as many other programs where accounting courses are a component of the full delivery. Our various MBA programs, professional MBA, full-time MBA, executive MBA, and many others. As you all will know, we face high levels of uncertainty coming into the fall 2020 semester, but we maintain the masters at very similar enrollment as prior year, and even increase our undergrad enrollment. Just to give you a glimpse, in 2020, we maintain roughly 90 students in our various masters in accounting programs, which is flat from last year, which I think is a great achievement. And then the major in accounting, we increase our intake to have now over 24% more students than prior year. So this puts us roughly in 250 accounting undergrads, which we're very happy. We continue to pursue excellence in growing areas of accounting education, in particular data analytics and joint finance and accounting programs. We just launched a Bachelor of Science in Finance and Accounting that allows students to get majors in finance, in accounting, and also a minor in analytics, which is really for go-getters. And we're waiting for the first generation of those students to go out in the workplace. This is just the start. And also, I want to highlight that our faculty has a deep expertise in data analytics, and then we continue to pursue that. And we have developed new courses and technical resources, and continue to make inroads into the world of analytics. Another thing that happened this year is an important development in terms of fundraising and other impact, is that the school was renamed the University of Miami Patty and Alan Herbert Business School, or for short, we use the Miami Herbert Business School, which is something that we have pursued for years, and we finally achieved to have a name on our school. Now, I foresee that many of you will have questions or interest on what are we doing in terms of contingency measures during the COVID-19 pandemic. We are happy to report that the school has been extremely vigilant and very proactive in achieving the goal of fulfilling our students' desires and aspirations to continue their education. A message from the top that we all share is the show must go on, and we must enable our students to graduate and enter the workplace as time comes. For example, I teach a course, and I've been really positively surprised by the level of engagement of our students. Earlier, someone was asking me how many people are actually showing up. So say, our estimate is roughly 2/3 to 60% of students are deciding to be in person at some point or another. But the other 40%, of course, is served through remote connections. As some examples, we have plexiglass shields in all classrooms in front of every other seat, which seems mundane, but I can only think of the effort that it required to do that. And every seat is numbered throughout campus, so we know at any point in time where the majority of students are sitting and who are their contacts, and etc. We have conference call capabilities in all classrooms that allow us to use Zoom and similar platforms. We're proud to accommodate students' preferences to be in person or remote or hybrid. Students can, and their communities can certainly choose what is the best way to engage with university. We just did a survey of students taking accounting courses, and the survey revealed that things are generally going well. But of course, we keep an eye on future developments and on the pulse of our students and faculty. But I'm cautiously optimistic in reporting that we seem to be doing well. Sorry, there was a technical glitch. Now, the fear of disruption seems lower now, and I feel happy for that. And I also want to take a quick opportunity to do some advertising. We took students for the fall, but we will also take students for our master's programs in January, right? So we have a spring 2021 date, and we will be happy to accept any students that were not able to make it for the fall for whatever reason. So if you know of anybody, a colleague, a friend, a family member who is looking for start their education, we will be happy to talk to them and coach them towards a 2021 spring start date. Now, in terms of our faculty, we have 19 full-time faculty, 13 of which are tenure track, and 6 are full-time lecturers. We are a team of very committed individuals, and I'm very happy to work with them in an ongoing basis. We, as a faculty, keep gaining influence and recognition within our school. For example, Professor DJ Nanda, who was the previous department chair, is now Associate Dean of Faculty, which for those that sort of don't picture what is this, is that he has moved to be a managing partner now. Right? And he is the person that is in charge of overseeing and evaluating the performance of all faculty within the school. Professor Fabrizio Ferri is director of the school's PhD programs across disciplines. He's part of the MBA Redesigning Task Force, and he's coordinator of a research cluster on corporate governance, which is one of 4 combined research initiatives across departments. And finally, he's an editor of 2 top accounting journals. And then Professor Khrystyna Bochkay received the 2020 Most Outstanding Teacher Award. This is just some accomplishment among others that our faculty has achieved in the past 12 months. For example, we collectively had 21 accepted papers for publication in the last year. So you visualize what this means. A typical accounting article in a top journal takes about 3 years to complete. And in the 4 or 5 years of starting life of an academic, we are proud to maybe achieve 3, 4, 5 at most published articles, right? So we went through 4 times that collectively in the department. I also don't want to go by without acknowledging the contribution of the members of our advisory board. This is comprised of senior members of the accounting profession and the business community that provide us with invaluable feedback about what the market demands from our students. And they also help us to maintain a bridge between us and the professional world. They also help in putting together this program today. And we are especially thankful to Mark Margulis, who was the chair until this year, and Henry Pujol, who was the secretary and treasurer. Brett Friedman, who was the vice chair, will start as chair this year, and we'll have Ray Sommerfeld as vice chair and Alex Hoya as secretary and treasurer. Thank you very much to all of you and several others that participate in various committees. We're really proud of our connection with you, your firms, and for all of the work that you perform really out of goodwill. And last, I want to thank our panelists, moderators, and all of you who are at home or office watching this webinar. As you know, there is no registration fee for this year's event. So we want to make it as big as possible. We want to have an influence. We selected topics and participants who will have ideas about current issues that are of wide interest. So I encourage you to invite your colleagues and friends to join. There is one more date next week, so there's still time. And finally, I encourage you to support our department if you can. We will, of course, appreciate your donations. This event is the main department level fundraiser. That's what has been for prior years. We have many initiatives throughout the school that work in various ways, but this event is a source of funds for initiatives that directly enhance our students' experience, aid our faculty's teaching and research goals, and sort of give us some opportunities to do things directly at the accounting department level. So there will be a link sent to all of you later in an email, and also published in the chat. This event, finally, will be widely broadcast and available in our YouTube channel. So that's about it. If anybody has questions or ideas or suggestions, I'll be happy to talk offline or to receive feedback through email or other means. Thank you very much. Now, I would like to give the word to Professor Kay Tatum. She will introduce our awards for this year. And Kay has been with the university for a while. She's an associate professor of accounting. She focuses on auditing, and she's been even in several standard setting bodies. And she serves as the vice chair for external relations since 2018. So without further ado, I pass the word to Kay. Thank you.
Thank you, Miguel. The award presentation has been an integral part of the forum since the first forum in 2014. The department, thinks it's a special part of the forum because it gives us the opportunity to recognize former students, now our alums, who've had successes, and also gets us a chance to recognize some of our faculty who've also had successes. So today it's my pleasure to first present an award for our outstanding alum. I'm pleased to announce that the outstanding alum for 2020 is Kim Griffin Hunter. Kim is the managing partner of Deloitte, South Florida. As far as getting to that point, I'd like to provide you a little bit of background about Kim. She started in her accounting at the University of Miami. She has a Bachelor's of Business Administration, 1988, the MBA, 1995. I think it's interesting to read that some of her first memories of the University of Miami are coming to campus with her mother, who was an educator and was working on her master's at the University of Miami. Kim says she connected to the campus at that point, so when she was applying to universities, University of Miami was one of them, and we're so happy that she accepted the offer to come to the University of Miami. Another note on that, one of Kim's son is presently a student at the University of Miami in the Business School, a finance major. So I kind of like the story of three generations, all Canes. As far as starting at Deloitte, Kim says that she, had an opportunity to interview at Miami with many excellent firms and companies, but the culture at Deloitte was a good fit for her. So she accepted the entry-level position at Deloitte, and she's been there ever since. As I said, she's today managing partner of the South Florida offices. That includes Miami, Fort Lauderdale, Boca, West Palm Beach. She oversees 600 people, so it's a big responsibility. And she's also served on the firm's management committee. So I guess, as I look at it, it truly has been a career path for her. As far as her path, she started in the traditional audit path, but as she moved on in her career, she developed an expertise, a special interest in the health services and life sciences area. She also moved from the traditional audit more into advisory services, and so has been active, in many types of services, including even mergers and acquisitions in the healthcare field. As I've read about Kim, because she's been in the news a lot lately, in particular since her appointment in January 2019 as managing partner, a couple of things really emerged. I saw how important Kim views community engagement. And when I say community engagement, I could see wherever she's been, whether it's the University of Miami and she was active in a social sorority, whether she's at Deloitte, she's active in the management committee, the professional accounting community, she's active in the Florida Institute of CPAs, in the healthcare field. She's been active in the Healthcare Financial Management Association, also active in the National Association of Black Accountants, and many other, civic and areas in Miami, things like the Orange Bowl Committee. So it's her engagement has been impressive. And then one last thing, I noticed also that she's a big believer in mentorship. And she just said, along the way, she believes that mentoring is so important. And she said, simply put, and this is a quote, "I try to find the time to do it every day, sometimes in small ways, and sometimes in large ways. It all matters." So it's truly my honor and pleasure to present the 2020 Alumni Award to Kim Griffin Hunter.
Thank you, Dr. Tatum. Thank you very much for the honor and the prestige of this award. And boy, you did great remembering about my mom and going on campus. I think you and I talked about that. And I can only say Dr. Tatum because she was actually one of my professors. So it's amazing when your professor is now recognizing you for an award. So it just makes me smile and humbled. And I want to say thank you to the entire university staff for this prestigious award and recognition. When you wake up in the morning, as you see behind me, I say, be kind. And so I just thank you for being kind and being kind to our community. Making an impact that matters requires a great education. And if we look at what's going on around the world in our country, we all need to make an impact, but you can't make it without education. And having two sons, one in college and one in high school, I understand the difference a great education makes, and everyone doesn't have the opportunity. So I am blessed that I had the opportunity and that my mom had the opportunity to get a master's, and now my son is in college. But I say for those out there that have the opportunity to help another kid, help a student, help them come along, that's what we all need to do. My role as managing partner is not about the title. It's not about, I'm leading hundreds of people. It really is being able to give back and have the ability to bring the next generation, to hire students and to mentor students. And as the accounting field evolves from the traditional where I was using paper and pen and big charts, and now we're using computers and data analytics, there's a new skill set that is required, which means we have opportunities to bring students who non-traditionally were not interested in accounting. So I think it's important that we continue to promote the profession, promote the difference that we're making in society, what we do, and promote that we can help with the disparities that happens for people who are underrepresented in this profession. I think that's a big deal. They need to know this is something that is an open opportunity, but they need mentorship and they need all of you. So I wanted to say thank you from the bottom of my heart on behalf of my family and my firm, Deloitte, and I appreciate everything you do. Go Canes!
Thank you, Kim. Beautiful comments from, like you said, your mother, the education, today's environment. So thank you so much for accepting our award.
Thank you.
You're welcome. At this point, I'm going to move to a second award. This is one that I get to present to one of my colleagues. It's the Accounting Faculty of the Year Award, and the award goes to Khrystyna Bochkay. Before I pass the screen to Khrystyna, I'd like to tell you a little bit about Khrystyna. Khrystyna joined the University of Miami accounting faculty in 2014 after receiving her PhD in accounting from Rutgers University. Since joining the faculty, she has developed a distinguished record in research, in teaching, and in service. With respect to research, she works in a variety of areas, and it's because her research expertise is textual analysis. So if you'll look at some of the topics, she's looked at earnings announcements, how investors are using information. She's looked at CEO disclosure styles, disclosures and going concern opinions. So it's a wide variety of interesting and important topics, but that characteristic of textual analysis runs through that. With respect to the publications, she has had 4 publications. 3 out of the 4 are in the Accounting Review, which is one of the top 3 academic journals. Just to emphasize how important that is, there are many people who go through their entire career and never have a publication in the Accounting Review. And she has 3, and actually if you look at her in progress list, there's also a conditional acceptance for a 4th one in the Accounting Review. So it's an incredible record. As a tribute to her, research, she's invited to conferences and to seminars to present her papers and to teach her research technique. Just in the last year, she has presented here in the US at Wharton and also internationally presented at Cambridge in the UK. So really some prestigious institutions. So we're very proud of her that she's out there presenting. That's the research. So sometimes someone's good at research but not good at something else. But Khrystyna excels in the classroom. Since arriving at the University of Miami, she's taught cost accounting, which it's not my area, but I'm glad it's Khrystyna's because she's received excellent evaluations. If you look at the evaluations over the 6 years, the instructor ratings have gone from 4.4 to 4.9, with 5 being the top score. So the scores are excellent. And in fact, as was pointed out earlier, she just this past spring was winner of the 2020 Most Outstanding Teacher Award. And keep in mind, that's not most outstanding in accounting. That was, across the business school departments. So that's, outstanding over management, marketing, and finance. So we were so excited and so proud of her. With respect to just the overall, I'd say service to the department, I was talking with my friend and colleague, Deanna Falsetta, and she wrapped it up this way. So I just want to quote what Deanna said. She said, "What makes Khrystyna so special is her supportive and collegial manner, including mentoring and working with doctoral students, working with faculty on research papers, and sharing online teaching best practices. Khrystyna's office door is always open, and usually a student is sitting across from her desk, eagerly listening to her words of wisdom." Khrystyna, congratulations on being the 2020 Outstanding Faculty.
Yeah, okay, so I'm unmuted. Thank you so much, Kay. It's a great honor to receive this award, and being a junior member of the department, I understand completely that I don't deserve this award. But this award to me demonstrates, and to everyone should demonstrate, how supporting our department is, starting from our department chair and other faculty, and also ending with our excellent graduate and undergraduate students. As Kay mentioned, I have been at the University of Miami for almost 6 years now. And all this time I had no other feeling but the feeling that UM is my family. And I'm not just saying this right now to look nice on the screen or something. Those of you who know me, who saw me at conferences and meetings, they know that I am always very vocal about saying that UM is the best place to work. And this award only encourages me to work harder, to push harder, to help others, to mentor others, to, what we say, pay it forward so other people can be more successful. I wish everyone a productive and healthy, most importantly, healthy year ahead. And I thank everyone who supported me. I thank everyone for mentoring me over the past 6 years. You are my family, so thank you.
Oh. Thank you, Khrystyna, just for your kind comments there, your observations about the university, both professionally and as a family. And again, a very deserving recipient. So congratulations.
Thank you.
At this point, I have a third award to present. And if I can imagine, Daniel Medina in the background is now scrambling because he doesn't know about the third award. At least I don't think he does. So this year we've added a third award. It's the Outstanding Service Award, and it's being presented to Daniel Medina. A little bit of background on this. Daniel, is the director of the accounting programs, the graduate accounting programs at the University of Miami. In that position, he oversees the admissions, the curriculum, clearing students for graduation. During the time that, the students are there, he's there available for advising. The students connect with Daniel, and it shows as far as his teaching expertise. He teaches in the graduate accounting program. He teaches the forensic accounting and fraud examination course. It fails to the course limit. Typically, there's a waiting list to get in, and it's well received by the students. In fact, the last 2 years, the Masters in Accounting classes of 2019 and 2020 have voted him the Outstanding Teacher Award. So he's been successful in that. With respect to the connection to the students, I thought it was interesting that, again, I reached out to Deanna Falsetta. I said, Deanna, would you like to make a comment about Daniel? And, when she was in the position of vice chair of the department, she worked closely with him along with Professor Sundaresh Ramnath. And she came back because Daniel, actually his undergraduate and master's degree are from FIU, from Florida International University. But here's what she's had to say about Daniel. She said, Daniel is a true cane and mentor to our accounting students. Under normal, non-socialing distance times, there's a line of students outside his office waiting for school or career advice, or even just to talk about this week's football game. There's a reason students gravitate towards him. It's no secret, he cares. That's from more the student's perspective, but I would just like to add that in my position as vice chair, I've had the opportunity to work with Daniel on many, many projects. This forum is one of them. The newsletter is a second one. We also have worked together on the Accounting Advisory Council and now the new Young Leaders Group. And in particular, since he's there recruiting students and placing students, you're going to find Daniel actively involved in things like next week's Meet the Firms event, the career fair, and I'm sure I'm leaving something out. It's, just kind of a personal story, and this is about his caring not just about the students, but also about his colleagues in the department. About a year ago this time, I was on my way to class, the last day of class. It was student presentations. And as some of you know, I take a ferry to get to the mainland and then go to campus. As the ferry was in the middle of government cut, it blew an engine, according to the captain. And we sat out there for an hour. At some point, I realized I wasn't going to make it to class. So I called Daniel. He was at the university. I said, Daniel, could you just go let the students know I'm not going to be there today? He said, sure, Kay. And he said, oh, what are you covering? And when I told him it was a presentations, he said, that sounds interesting. I'll go cover the presentations. I did make it to class just right before it ended, but it was a good environment, a positive environment. So I could see why the students elected him outstanding faculty. And from my perspective, he is a great colleague. With respect to the service this year, just all the things I mentioned, Daniel has continued to contribute on those. So it's my pleasure to recognize Professor Daniel Medina for the 2020 Outstanding Service Award. Daniel, are you there?
Yes, I'm here. And definitely caught me by surprise. Kay, thank you. I'm humbled. You mentioned I'm technically, education-wise, not named, but I do bleed orange and green. I'm, again, very humbled, and I appreciate this recognition. And as Khrystyna mentioned before, this is a testament to our department. I'm not kind of the guy that likes getting pats on the back or being in the front lines and being noticed. I'm more of a behind the scenes kind of person. I do everything I do for my colleagues, for my students. And I appreciate that you guys have recognized me. So thank you. Again, very humbled, very honored, and happy to be here. Love my job, love my students, love my colleagues. So thank you, Kay. Thank you, everybody.
Well, again, congratulations, Daniel. And at this point, I'm going to pass the screen, I believe, to, I think it's Emmanuel De George. Do I have that correct?
Correct. Yeah. Okay. Thank you, Kay. And congrats to, oh, can you hear me? Yeah. Very good. All right. Thanks. So congrats to Daniel and Khrystyna. So I'll keep it fairly brief because I know we probably all want to get to the main event here, but I just want to talk a little bit about the Young Leaders Group. So my name is Emmanuel De George. I joined Miami from a London Business School in 2019. I've been a part of the Young Leaders Group since 2020 as a faculty liaison. So the Young Leaders Group was formed, I think, in about 2018 with 16 initial members, and it was really the goal of bringing together a dedicated group of Miami accounting alum, recent graduates, to work closely with us here in the accounting group, and also to build up our programs and introduce students to career paths in accounting. So it's very much member-led group. We now have 23 very dedicated young alumni members. They run several academic events per year where the goal is to engage with freshmen, sophomores, to expose them, like I said, to careers in accounting and our programs. But more importantly, and this is what's really great about the YLG, they get the real world perspective from a recent graduate that was literally in their shoes, a few years before. So for them, in that respect, it's pretty invaluable. Our members also obviously get to represent their firms, which is mutually beneficial for everyone. It builds our recruiting network, and it also fosters stronger links between the Miami Herbert Business School here and the broader business community. So they really are our best ambassadors. So to that end, we have a YLG Young Alumni Award, which we're sort of going to recognize. And this is recognizing a recent alum that has demonstrated outstanding contributions, obviously, to our community here, leadership, dedication, and of course, made an impact in their professional career. So we ask our YLG members to nominate someone, and a worthy recipient is chosen. So with that, I'm going to turn it over to Robbie, who's been with the YLG since inception, actually, to announce this year's winner. So Robbie, all yours.
Thank you very much, Emmanuel. Good morning, everyone. My name is Robert Chiste, and I'm an audit senior at Kaufman Rawson, based out of our Miami offices. As Emmanuel mentioned, I'm a proud member of the Young Leaders Group, and I've greatly enjoyed continuing to make the connection between our current students and the young professionals in the industry throughout South Florida. I'm truly honored to present this year's Young Leaders Group Alumna of the Year to Christie Velasco. Christie is currently a vice president at Inter-American Bank. She's a double cane and obtained her bachelor's in accounting in 2011 and her master's in accounting in 2012. She's been extremely active within our group, both on and off the campus, and is a true ambassador to the Miami Herbert Business School accounting community and the University of Miami at large. Her efforts in speaking to students directly in the classroom and providing her authentic feedback to students at the Alumni Accounting Panel event have really inspired students towards continued success in both their academic and personal endeavors, which is really the main goal of our group. So just wanted to say congratulations, Christie, and thank you very much for your hard work this year and your dedication to the Young Leaders Group. Christie, I don't think we're hearing you.
Yeah, we can't hear you, Christie.
No.
Maybe join on your phone. So we're having some technical difficulties. Let's give her 1 minute, see if she logs back on and can say some thank yous.
Yeah, I think we can hear her now.
Can you?
Yeah.
Yes.
Oh,
Yeah.
great.
Yeah.
Yeah, I think my microphone on the actual computer was off, not on the Zoom. I don't know why. I just want to say thank you. Thank you for selecting me. I'm very grateful for, for everyone voting for me. And I'm happy to be part of the Young Leaders Group since the beginning, actually, with Robbie. I'm always happy to help UM. And, I've been a Kane my whole life. My dad went to UM, my sisters have gone to UM, also in the accounting department. I'm always happy to continue helping and speaking to students in the class and, whenever I can. And I think the Young Leaders Group has really, helped with students and actually learning a little more about how it is now working in accounting and, even after the firms as well. So thank you, and I look forward to continuing being part of the group.
Thank you, Christy, and congratulations again. And now I would like to introduce over Professor Khrystyna Bochkay, who she's going to be the moderator for today's panel discussion, and we will get started. So thank you very much, everybody, for your time, and go Canes.
Okay, thank you so much. I hope everyone can see me and hear me. Normally we serve mimosas at this hour, but since it's virtual, let's just do virtual mimosas, virtual cheers to everyone for joining the forum. So the topic of today's forum is audit, tax, and corporate implications of COVID-19. And we are very happy and thrilled to have 3 industry experts who will be sharing their insights with us. So our first panelist is Monica Frank, who is an experienced senior manager at Ernst & Young. And Monica will be promoted to partner in less than 2 weeks on October 1st. Congratulations to Monica on this achievement. Monica is a strong professional in financial statements, reporting, GAAP reporting, internal controls, and many more. Monica is a proud graduate of the University of Miami Business School. And as I said, we are very happy to welcome and have Monica on the panel today. Our second panelist is David Karian, who has been the Vice President of Taxation at Mastech for the past 10 years. Mastech is a Fortune 500 company, infrastructure construction company located here, headquartered here in Coral Gables. In addition to Mastech, David has 18 years of combined experience working for Lennar and Deloitte. David is a proud graduate of both University of Miami Business School as well as School of Law. Last but not least, our panelist is Sean Haggard, who is the tax principal at Kaufman Rawson. Sean has more than 17 years of experience performing R&D credit analysis, audit defense, assisting companies in qualifying and capturing research credits. Sean is a proud graduate of Cal State. Even though deeply in heart, I think we are converting him towards being the Kane. And while in California, Sean developed a systematic project-by-project approach of qualifying activities that evolved into standard industry practices and IRS methodology that we see today. So please join me in the virtual round of applause, welcoming our panelists. And again, our discussion today will cover audit, tax, and corporate reporting implications of COVID-19. During the COVID-19 period, we'll discuss what we were doing prior to COVID-19, what happened during, how we adjusted to the new environment, and what to expect going forward. Given that we have many participants who are students, our panelists will also share some insight, will give some practical advice on what skills are needed to be relevant and successful in the profession today. Okay, I just want to remind everyone that around every 15 minutes, you will have CPE question popping up on your screen. So don't forget to take it. And when we see that question, I will stop for a couple of seconds for you to be able to answer the question. Okay, so let's get started with our panel. And the first, as I mentioned, the first thing that I would like to review is just simply for historical context, since we all come from different backgrounds, we have different expertise and so on. Where were we prior to the COVID-19 on the tax, audit, and corporate side? So Sean, Monica, and David, if you can, like all of you can say something on that front.
Sure. Yeah. You know, where were we? I tell you, we were still digesting the Tax Jobs Act from 2017 that got enacted in 2018. It was the most comprehensive and convoluted changes in tax law in 30 years. And it was put together in about 2 months, or it spent about 2 months in Congress. It was put together over 6 months. The last time anything of this size had come out had taken over 2 years and was bipartisan. When the current administration came in, it was pushed through very, very quickly. And we inherited a lot of new acronyms, GILTI, FDII, and all these things had tax implications. And so we were still digesting and applying code sections that we were still receiving guidance on up until COVID-19. And we were ticking along pretty well. Everything was going along pretty good up until that point. But we still were digesting a tremendous amount of information that really we hadn't had a chance to really have at least a year to digest and be able to apply properly. And so we were in something of a lag in between there, and we were digesting it and putting it all together. So then COVID hit, and that changed everything.
Thank you. Monica, can you please say something on the audit front?
Yeah, sure. Pre-COVID, I think I was just a young student in Dr. K. Tatum's class. That was maybe a few years ago, but pre-COVID, we were still in year-end busy season for 12/31 calendar year-end audits. We were working through a period of tremendous accounting change with the adoption of new accounting standards, revenue recognition, leases, and then most of our clients were working to adopt CECL, the current expected credit loss standard, which we really thought going into it that, well, this was going to be impactful, but largely impactful just for banking and financial institutions. Still on site at our clients every single day and just working to get our jobs done. Really could not foresee the level of uncertainty that would come into the profession when COVID hit.
Yeah, and David, can you please say something as well on your side? How do you feel? Where were we prior to COVID-19?
Help if I unmute it. Sure. From a corporate perspective, we were at MasTec enjoying record earnings, record cash generation, record project backlog. The industries we worked in, they were in expansion mode. We do a lot of work in the energy field and communications. Everybody knows, 5G is coming, and we do a lot of work with fiber to the home, and we do a lot of work in clean energy. All those industries were booming. From what Sean said, we were enjoying, tax cuts, and we were also enjoying reductions in permitting and regulations that had come along. And in other words, from a corporate operational standpoint, we were booming. From a tax side, to kind of echo some of the things Sean was saying, we were enjoying the reduced rates. We were trying to adjust our international tax structure to all the provisions that Sean laid out. All of our financial statement audits, all of our state and local audits, those were things that were done in our office, typically on site. We had the pleasure of, going to conferences and training all across the country, fun places like New York, Washington, Las Vegas. And, usually when we had meetings, we were doing that in person. And, we were full in swing with automating our tax process and other accounting processes at the company. So, as obvious to everybody, everything was going great. And, now we have to deal with COVID as the new reality.
Right. Yeah. Unfortunately, or maybe fortunately, that's what we will find out today. So, so what has changed due to COVID-19? And Monica, this question, I want to address this question first to you. Is the scope of the audit changed, for example? How do we do audits remotely now? What are the advantages, disadvantages of doing audits remotely now?
Yeah, so the scope of our audits are different. Like the scope hasn't changed because the accounting or the audit standards haven't changed. We're still following either PCAOB standards or AICPA standards or whatever the relevant standards are in the jurisdictions, but how we are executing them has significantly changed. We have gone from being on site, every single day pre-COVID to doing it 100% remotely. We're serving at EY, we're serving some of the largest, Fortune 100 companies where we could have had a team of 100 people on site every day year round. When some of our smaller clients, those audits may have been done in or out of the office. But now we're trying to supervise, our new staff and senior auditors remotely entirely. So there's just a different level of interaction amongst the team and amongst the client. We're also working through a major digital transformation, and we're trying to accelerate our digital transformation on the audit side. So while we would have traditionally performed very large sampling, hundreds of selections from time to time, we're really looking to use digital audit techniques. And I think with COVID, there's been a push to really transform that. So the scope is the same, we're just doing it differently. We're trying to, do it better and work smarter since everybody is a part. There's also some areas that are very challenging remotely, for certain companies that have significant amounts of inventory observations, which is a very, audit procedure that's performed in all companies with inventory. A little bit antiquated of a procedure since you're sampling sometimes 25 selections when there could be millions or billions of dollars of inventory. We're trying to use digital techniques or virtual techniques to conduct those. So a lot of transformation is what we're seeing. Things that are really outdated procedures or maybe a bit antiquated, I think we're looking to transform them in this digital environment or in this remote work from home environment. Also, as we conduct our audits, we have to be very mindful of fraud and with our management inquiries, and it actually puts a lot of strain on fraud. While I think all of our clients are honest, we do operate in an environment where we need to trust but verify. So different level of verification and really looking for, authenticity. There's a lot of, things that are changing and evolving, and specifically for me, since I primarily work in the technology industry, working with companies that are software service companies, I think there's a lot of advantages with the disruptive technologies that are coming. I do think there are some disadvantages with the interaction between our executives and audit executives and client executives. We're not walking the halls, so sometimes there's a bit of a disconnect, but we're trying to be smarter about how we can engage. And the same with our people, we're not seeing them as frequently, so there can be a little bit of isolation that anyone's feeling in any environment. But, as auditors, we try to be creative and find ways to, connect internally and externally.
Right. Yeah, it's just amazing how we have to, all different things we have to come up with to be able to trust but verify at the same time, right? When it comes to audits. So David, we have a question popping up on the screen. So if you don't mind answering that right now. So David, what are the main corporate priorities during the COVID-19, I don't want to call it crisis, but period, right? I assume that now corporations are facing a lot of changes in the budgeting process and so on. So can you touch a little bit on that?
Sure. At MasTec, we had two main focuses, you know, a lot of little focuses, but two main focuses, you know, keep our employees working safely and find ways to manage our cash expenditures so that we didn't have to lay off employees or make any pay cuts. You know, we recognize that our people are, you know, our most important asset, and we wanted to do everything we could to get to that goal. So, you know, we're fortunate in the industries that we work in that they're essential businesses, you know, working on people's internet and energy and providing electricity to people are, you know, important and essential. So our workers that were out doing construction on those projects were able to continue working. But our challenge was, how do we keep our corporate office and our business offices, you know, working? We're a construction company, and we weren't set up to, you know, have a full working remote workforce. You know, everybody was capable of working remotely, but, you know, our IT infrastructure just, you know, wasn't set up so that everybody in our offices could work remotely. So the first thing we had to do before we, you know, really got up and running on a remote basis was we had to boost our IT capabilities. So, you know, we had to make sure everybody could get on VPN and do all the work and access all the files that they needed to do before. We increased our cybersecurity, because it's much easier to hack computers of a corporation when you're working remotely rather than being in an office on a secure network, you know. And then, you know, not surprisingly, we're sitting here on a Zoom call. You know, one of the things we had to do is make sure everybody had that kind of capability, whether it was Zoom or we use a lot of Teams, but we use Zoom as well. You know, make sure people had that, you know, ability, and get that on everybody's computer, everybody's phone, to be able to do that. And, you know, what that did, you know, in addition to allowing people to work remotely, is we found that really changed the way we did work. You know, everybody used to do conference calls all the time and everything else, but, you know, we weren't that fluent, I would say, in sharing documents and collaborating together. We would use those kind of tools just to have a conference call. But now we learned that we could be so much more efficient by using this collaboration. You know, and I guess one of the unexpected benefits from Teams was we also found it was a tool to really manage our people better. You know, we didn't see our people in person, but what we found is we were having a lot more meetings with people. You know, at first it was making sure people had things to do and making sure, you know, people were on task. But what we learned is, you know, having those meetings was a great way to find out, did somebody need help? Did somebody, you know, need to be trained in something? And, or the reverse, did somebody get all their assignments done and they needed new work? So it was really a great benefit to us from an efficiency standpoint to find this tool. And I think that's something that, you know, even if we go back to, you know, a more normal office life, that tool will continue. Right. You know, some of the other things, you know, like I said, we were focusing on cash management a lot. We definitely wanted to not have to lay people off. So that was a big focus for us from a business unit perspective. They were focusing on cash collections, and in this challenging time, you know, all of our customers have cash challenges as well. So it's even harder than normal to make cash collections, but, you know, our business units have done a tremendous job of that, you know, in this environment. And then, you know, on the flip side of collecting the cash, we were looking for every opportunity we could to, you know, eliminate or defer expenses. So what that meant from a tax department perspective was, you know, what kind of things could we get rid of? The first thing, you know, easy, obviously nobody's traveling, but, you know, typically we would travel to our subsidiaries all over the world, conferences and things, you know, that was eliminated for the year. So that was a big savings. And then the bigger item, which, you know, I'm giving the tax department perspective, but it was a corporate perspective as well, is, you know, let's look at our professional fees and kind of do a new budget, in March and say, hey, what projects can we eliminate this year? What can we defer maybe to the end of the year, to next year? And what projects that we might have used the tax advisor for can we maybe take in-house? And we did a little of all of that. We do a lot of state tax returns at Mostech. We're a large company, so we have over 500 returns that we typically do, and unfortunately they all come due around the same time, so we usually use a lot of outside help in that. So that was one of the things that we took some of that in, and we still allowed some of it to go out. And other projects like automation, some of our automation projects we found we needed to accelerate because they helped us through the COVID remote working situation, but others we needed to defer or cut to, they were nice things to have, but they weren't a necessity in a year that we had, cash constraints. More from the cash conservation side, we looked at all different countries, federal government, income, sales and use tax. There was a number of guidance that came out that allowed companies to defer their payments from March, sometimes all the way out to right now, to September. So we were able to defer millions of dollars in payments, and that helped the company a lot. Now, the flip side of that is it also made our subsequent estimated payment calculations difficult because it basically changed our process, where we would have had an extension payment made, Q1, Q2 payment. Those were all missing, and now we're looking at making a Q3 payment and trying to assess it in a different manner than we normally would. But obviously a great benefit to the company to be able to push those payments out.
Right.
We also went to our state auditors and said, hey, obviously we're in the middle of COVID. Is there a way to settle this case for a lesser amount, or can we defer, settle for this amount and delay the payment term? So, those were also opportunities. You say everything is not a crisis. Those were kind of opportunities that we took advantage of to go and try to settle an audit and help the company, and, also usually help the state because it got, money into them when they're in need of money. Just maybe touch on a couple of CARES Act things. That the CARES Act was the COVID bill that came out in March that had a lot of tax provision. I know Sean's going to go over a lot of that, so I'm just going to touch on a couple of items. There was a deferred payroll tax withholding bill, which allows a company to defer the 6.2% withholding on compensation. So you can imagine a company the size of Mostech, that's quite a big number. So we were able to defer whatever would have been due monthly from March to the end of the year to either the end of 2021, 50%, and another 50% at the end of 2022. So again, another large number that's deferred, almost 2 years out in some cases. And then, there's also an employee retention credit, which the intent was to help big companies continue paying employees that either aren't working or aren't working their normal tasks as much as they normally do, and it provides a credit of up to $5,000 per employee. It's helpful. There are some issues with the credit in that, unlike some of the other provisions for small business that I think Sean's going to talk about, we're only getting $5,000 per employee, but it is a help. But some companies that aren't as fortunate to us and don't have as much of their business up and running, that may not be enough, and they may be laying off employees. But we were fortunate that was enough to help us, keep our employees. It's a very difficult credit to document and substantiate, but it is a worthwhile credit.
Okay, thank you, David. If you don't mind, I will stop you here since we have a similar question to Sean and Monica from Wayne Kellner, asking about whether Sean and Monica help their clients to assist with the CARE Act and obtain PPP loans?
Yes, let's back up for historical reasons, as you say. When we have such, economic disaster ever since the Great Depression, you can't raise taxes. You flood the market with liquidity. The government comes in and basically opens up the gates. So as I was talking about the TCJA and the act that was really kind of pieced together very quickly, now we came up to the coronavirus, right? We're in March. So now the first thing we do as a government is we throw money at it. And generally what happens is you throw a little bit of money at it and see if it sticks. And then you throw a little bit more and to see what would happen, right? So early March, we had the Family First Coronavirus Act, right? That was the first one that came out. It wasn't another 2 weeks later that we had the CARES Act. And this was $2 trillion. This is a $2 trillion act. This is close to the entire 2019 federal spending budget. So everything, all the gates had been opened at this point. All of the work we had done to digest all of the changes from the NOLs to the limitations of the business losses, all that all of a sudden just got wiped out. Now we can take back your NOLs to prior years. And so the CARES Act, which was 880 pages, $2 trillion, and it was hastily put together. It was really hastily put together. However, the difference was it absolutely flooded the market with liquidity. The Paycheck Protection Program in and of itself probably saves, arguably a lot of businesses. We'll see, because that data is really not going to be really fleshed out for some time to see how much it really helped. But the Paycheck Protection Program really was first initiated to help businesses in the retention of employees for 2.5 months. So the government thought, okay, look, worst case scenario, maybe we're going to be in this 2.5 months, right? No one really knows how long we're going to be in this and how long it's going to take to get out. But I was very proud of our firm because we immediately were up very late at night digesting this 880-page CARES Act, and particularly the Paycheck Protection Program, to get money into our clients. And David, I don't know if you guys were able to take advantage of it. I hope you did. If you didn't, then okay, you left some money on the table for someone who possibly needed it a little better, right? So that's where we were at. So now the floodgates had opened. We absolutely had to go back and redo almost a lot of the tax work that we had done prior, because everything had changed. We had bonus depreciation now that we could take on the real estate improvements. And so clients and us, we were really scrambling to this day to be able to, analyze and back out all of those changes that we were complaining about. And now we backed them out. And now we're sitting in a pretty good position tax-wise. Companies are able to take back the NOLs. The Paycheck Protection Program, which, look, if you don't get the biggest part was being able to get the relief of it. You would be able to get it just canceled, right? So if you retained your employees, but if you didn't, you just got a 4% loan, and it was deferred interest, right? So if you're not able to get the forgiveness, you still got a really great deal. So I really do give credit to the fact that, listen, the CARES Act was put together. It was thrown together very hastily, but it did put $2 trillion, into the liquidity into our markets that we're seeing right now that have helped us. And that has now kind of gone away, right? And everyone's talking about, to this day, what's going to happen now with the taxes. Is there going to be more relief? Is the unemployment going to be, we're going to give out another $600 from the government, right? So right now we're sitting with a split Congress, and they're still debating it. And personally, when we talk to some of our business owners, they are very, very split on the unemployment, because is it driving people not to go back to work? Because they can sometimes make more on unemployment than they can going back to work. Now, I don't have the right answer for that one, because I'm very fortunate. We're all very fortunate to be able to do what we do. And we're not the frontline, people out there, the necessitated workers, if you will. So I don't know what the answer of that's going to be, and Congress is going to have to answer that in the next few weeks to see where we're at with any more stimulus.
Thank you, Sean. Monica, do you have anything to add to the comments? Or we have the CP question popping up on the screen. So can you please answer that question?
Yeah, so in regards to the question on does EY have we help clients with PPP or the CARES Act? Like myself personally, since I work in the audit practice, I'm more assisting clients with the accounting. We do have tax professionals and advisory professionals that are working through all the different provisions, the ones that David discussed impacted Mastech, and as Sean discussed that they're doing at their firm. So we definitely have seen all companies of all different sizes taking advantage of the CARES Act to answer that specific Q&A. There was another Q&A in regards to has EY or have we put in audit standards regarding the impacts of COVID? I'll talk a little bit about one of the things we're doing, and EY and working with the PCOB and also probably all the other registered firms have been, we've been doing kind of quick inspections that are much more collaborative with the PCOB for them to look at how have the firms responded to COVID-19 in regards to auditing and reviews. So they looked at 10 different review engagements from either Q1 or Q2 to see if additional literature and standards were required to be issued in regards to the impacts of this. At what EY is doing, they have our own kind of forms and templates, but it's much more of from assessment. We're assessing what are the particular impacts on each client that we serve, and do we need to do anything different? And based on just the initial reaction from the PCOB and other regulators, we don't believe at this point that new audit standards are going to be issued. We are working off really what are the risks and the impacts, and then trying to respond to them timely. And some of the risks are significant, while others are not as significant. And I can talk a little bit more about accounting and reporting considerations, but I want to pause and see if there's other questions.
We have more questions about going concern and in general reporting. But if you don't mind me just postponing these questions for a couple of minutes, and I want Sean to continue if he has anything else to add of what happened on the tax front due to COVID, or what we expect to happen in the future due to COVID-19.
Okay, as we said, that before we were still digesting this big tax law. Then we now have to basically, undo everything that we've done at this point. So what's going to happen going forward, and what we're looking at right now, is there could be a regime change in November. And we're looking and clients and advising clients upon the candidates, which ones, particular tax impacts there could be. So now, coupled with the issues that we're having now with just dealing with digesting and unwinding all of the tax law changes, considering limitations, NOLs, now we're going to be looking very quickly, and businesses are going to have to work very quickly to decide if there's going to be a regime change, and individuals will have to decide if there's going to be a regime change here before November. Then that only gives you about 2 months. That's 2 months to do some tax planning if there's a regime change and what's going to happen. So, the best thing that we can say is you got to embrace uncertainty, because in our industry right now, in the tax industry, we have not seen these types of changes, and the potential changes we may see here in the future is unprecedented. One of the things that affects businesses, and David brought it up, he does a lot of multi-state, and right now the states are all hungry, right? And states right now have relaxed these nexus rules. The nexus rules meaning that a state has the ability to tax you. Well, because we have remote employees and everyone now is working remote. So therefore, if I have an employee in a state, I have nexus, and that gives me responsibilities to file in that state. Right now, we're seeing the federal government has never done anything with this. Because it doesn't, there's no federal dollars into it for the feds. But now we're starting to see some remote workforce bills that, you know, they've been around for 10 years and they always get kicked out. We might see some things that are different. We might see some federal action. We've seen some relaxation of the nexus laws with states, or excuse me, with companies who said, look, under the circumstances, if you have an employee in our state because of COVID, we are not going to, you know, force you and compel you into a tax filing. And that's good, because as David knows, anywhere you have an employee, you have a physical presence and they want to tax you on it. So as a remote employee, if I'm in Toronto working, then does that give my firm nexus in, you know, for Canada? And they are saying no. Right now, we don't have to worry about that.
Yeah, okay. And since I have you on the screen, Sean, what is your opinion? This question comes from Michelle Walters. What is your opinion on whether Treasury will make the PPP loan forgiveness non-tax taxable?
Just 1 second.
Yeah, please, yeah. Yeah, I apologize for for jumping to you again. Yeah.
Okay, let's see if I can talk. Excuse me.
Yeah.
All right. What was the question again? I'm sorry. Tell me a question. Let's see.
So the question is, what is your opinion on whether Treasury will make the PPP loan forgiveness non-taxable? So basically expense paid deductible.
Well, at this point, it is forgivable as long as you had the retention, okay? To back up to it, we help clients, and really to get the money was really about a one page, right? You do these calculations on how much my payroll was in this area for 2.5 months, plus utilities. You could be able to get the money to pay mortgages and your interest, and then it's forgivable. Right? And so the government, you have until December 31st right now to complete the loan forgiveness part. Now, the loan forgiveness part, I think we may need you, because it's about a level of a PhD. It is extremely difficult. And now there are some templates. We have templates, and we created a template for the forgiveness part. But you have until December 31st. Now, the question is, let's suppose I wasn't able to retain those employees, and now that number is not forgivable because I wasn't able to retain those employees, right? Now I have a loan. So will it be forgivable? That is unknown. At this point, you know, I can't look into the crystal ball, but as long as the economy, as long as COVID is around, we're going to see more stimulus. And I think that's pretty much the case. I don't think we're going to see, even if there's a regime change, you can't push through tax increases during these economic downturns. The Great Depression showed us that. Obama was able to do it a little bit, but he only raised it in the top 1%. We don't believe that there's going to be these wholesale, you know, tax increases if there's a regime change until the economy can withstand it. And then I do believe that there is a really good possibility that the paycheck protection loans will be 100% forgivable. And then that's going to be a nightmare for Monica and her team to sort that out.
Right. Okay, so the next question is from Mahesh, and it's about going concern. So I think Monica will be the one answering it. In regards to audits and reviews, has there been a closer look on going concern and subsequent events? And maybe more generally, Monica, maybe you can discuss some accounting and reporting implications, considerations during the COVID-19 period, like fair value measures, the non-GAAP measures, and so on.
Yeah, absolutely. So there's a number of accounting and reporting considerations, and going concern and subsequent events is actually top at the list of things that are generally an issue or a matter. So a lot of companies are calendar year-end companies, or have their calendar year end as 12/31. So we first, have to really assess, as management's assessing, is did these conditions exist at the balance sheet date? And that requires a significant amount of judgment as to what has occurred subsequent to the balance sheet date, and is a subsequent event that's disclosure only, or does have an accounting implication. In regards to going concern, management has it's management's responsibility to assess going concern for 12 months on the date that the financial statements are issued or being made available for issuance, depending on whether they're public or private. So if you're conducting an audit that's still not complete and it's May or June, it's the company's ability to continue as a going concern for 12 months past that date. There has been a significant amount of work that has been done and effort has been gone into that area, as there is quite a lot of judgments and estimates in that. Historically, on companies that were profitable, we hadn't, as auditors, maybe looked at that considerably, and then even companies that operated, with just earnings before EBITDA, positive EBITDA, we would say that we're not giving it like significant amount of effort, or that that we think that it's reasonably likely. Now, even where we have companies that historically were profitable or historically were cash flow positive or generated positive earnings from the EBITDA perspective, there is more significant consideration being given to that. And we are seeing, a lot of our clients, as discussed by, David and even Sean, that they're doing 13-week cash flows, and they're giving their auditors a lot more support from a going concern perspective. We have seen an uptick in the number of opinions that are issued with either going concern paragraphs or other emphasis of a matter related to the risk and uncertainties related to COVID. From a subsequent events disclosure, we have seen these disclosures becoming increasingly more robust, and that there is lots of disclosures in the subsequent events, what the company would expect, and including risks related to their ability to operate with their workforce being remote. So that subsequent event and going concern is one of the top areas. So for people that work for companies, you should expect that your auditors will be digging more into this. And for students that are learning, historically, maybe this hadn't been something that we really focused on, but now it is really a hot item. I can talk a little bit more about some of the other accounting and reporting considerations. COVID does have broad impacts. It impacts asset impairment. It could impact your lease accounting. It can impact exit and disposal activities if companies are exiting line of business. It can have impacts in derivatives, impacts in debt modifications. It's very widespread. So I'm only going to spend a few moments kind of talking about what we're seeing as probably the top 5 impacts. And I did already touch a little bit upon going concern and liquidity. So we are seeing even companies that are still doing well having some impacts in regards to asset impairment. And generally, as companies are assessing for indicators of impairment, COVID is going to be an indicator for every company. There's going to be some level of impact. As companies assess, asset impairment, like the order in which impairment, like quantitative or qualitative tests are conducted is also important, right? You start with indefinite lived assets, then your long-lived assets, and then you're assessing goodwill at the reporting unit level. So some of the finer points in this accounting literature that maybe hadn't been focused on, like what are your asset groups, what's your reporting unit, are becoming more and more of a challenge. In regards to asset impairment, there's companies that have very large right of use assets for all their physical locations, all their buildings, all their properties, and maybe at this point in time, they have actually had a CCU state for some of those locations. So just many, many things in regards to this environment where it's affecting asset impairment. Even some of what we've seen is even companies that haven't had a major impact on their, where COVID has not had a major impact on their operations, there's been some level of impairment in regards to operating assets. In general, just with accounting estimates, our clients are finding it increasingly hard because of the uncertainties related to COVID and also the availability of information. While we're all working in this work from home environment and there isn't as much connectivity, sometimes there is a little bit of a slowdown in the availability of information, or our clients are waiting to get information from third-party service providers, and they're also having some operational disruption. So just every accounting estimate is being, challenged and really looking, is that really the right estimate based on where we are in the COVID environment? I mentioned CECL, which is the current expected credit loss standard. I think, before COVID, we really thought this was not going to be as impactful as it relates to account receivable and short-term financial assets. But what we've seen in the last 6 months is most of our clients have had to, really reconsider how they adopted that standard and record additional current losses, because where you historically might have thought all your accounts receivable were collectible, you may have customers or clients that are more impacted than you, maybe because of the jurisdictions that they operate or various different criteria. So we're seeing quite a bit of acceleration and just higher reserves being recorded under that new model, which went into effect for public companies, but there is some relief for private. So we expect that to be more impactful. We're seeing in the environment, every company is affected by some level of contract modification, whether it's contract modifications with their contracts with customers or their leases, their operating leases, or debt modification. And we are seeing, troubled debt restructurings, or also just companies trying to take this opportunity to just really revisit their debt arrangements. So there's some level of accounting related to all of those types of contract modifications. Disclosure impact and non-GAAP measures is also something that, for companies that are SEC registrants and public companies, it's not only their disclosures in their footnotes, but it's updating risk assessments, updating MD&A, and then also considering non-GAAP. And, the SEC did come out with a lot of publications and clarification on what you can change from a non-GAAP measure. We are seeing, just like as an evolution in the accounting and kind of financial services world, a heavy reliance on non-GAAP. And, on a positive note, as we're starting to see like a lot of IPO activity, like this week alone, I think was the largest IPO activity like in the history of capital markets, with Snowflake and I think Unity closing today and a couple others. We're seeing a heavy reliance on non-GAAP measures. Those are what is indicating the value of the business. So just as companies are working through the impacts of COVID, it's very important to really consider what changes that they've made from a non-GAAP perspective. And this is something the SEC is looking at closely. The SEC is encouraging companies that are public, obviously, to over-disclose to provide investors real-time information of how this is continuing to impact, their operations over the course of the year. I'm going to pause for see if there's any questions.
Yes, I apologize for interrupting. Since you're talking about this, I'm thinking it's just a pain to analyze this from the investor's perspective. Like being a, let's say, call it retail investor and trying to digest everything that is happening inside the company and how they report about it, and then trade on this information and, let's say, remain not at loss or, as an investor. Like what sources do we have to look at? And you're saying that check risk factors, check MD&A, listen to conference calls and so on, right? To better understand these non-GAAP metrics and so on, what has been adjusted, what hasn't been, yeah.
And we're in Miami. I know people are remote, but our economy, is run by travel and tourism. We have, the 3 largest cruise lines operating in our backyard. So we do see a lot of some of the implications and where companies have really had to cease operations and delay lots of different things. And there's a lot of direct impacts in that industry. And, the travel and tourism from a hotel perspective and food and beverage. So we have seen more impacts here than maybe the broader US. But we do also have, in Florida and in South Florida, some companies that are still doing well. We have some large tech companies, that are thriving. So we're seeing both sides of it from an accounting perspective. And then one of the other huge accounting and reporting impacts is accounting for everything Sean and David discussed, because a lot of times the way I think of the difference between like tax and audit is tax is much more focused on cash flow and the amount of tax that you're going to pay. But audit and accounting is how do we account for these transactions? And sometimes, the accounting may be very different than the actual flow of the cash. So that is probably the 5th largest impact in regards to what are we seeing from a professional environment.
Yeah, thank you, Monica, for sharing these insights with us. And we have a CPE question on the screen, so take a couple of seconds to answer it. And we'll continue with our discussion. Okay, so we discussed that we do most of our work remotely now, right? And this question is to all panelists. Do you foresee that things will ever go back to normal, or we'll have a new normal? What things do you think will have to go back to in-person interactions, and what things can remain in the remote fashion? So David, if you don't mind starting on this question.
Sure. I don't think everything will go back to how it was. I think a lot of things will return to normal face-to-face interaction. But I think what we've learned is we know we could do a lot more than we thought we could, remotely. I still think there's certain things that happen better in a face-to-face, encounter. A lot of times just by being in the office, I run into somebody and we exchange information. Whereas today, if you're not scheduling a call or a conference call or a Teams call or something to that matter, you may not be talking with everybody you would see in an office and getting information. So I think those types of things, you just can't help but be better in the office. But like I said, I think we learned a lot about the amount of work we can do remotely and how many people can really be remotely. And like I said, a lot of those things I mentioned, that we learned on Teams, we learned a lot of useful tools that even if a lot of people return to the office, we would still use those tools to manage our people, to share documents, to do collaborative reviews of documents. I think those things will continue. The other thing I think is difficult, and this is probably more difficult in the accounting firms than in industry, but it's difficult in industry as well. When you have a new person, I think that's a harder environment to start on a remote basis. When we went remote with people that have been doing, their tasks, and they know what they need to do. They know who they need to call. They know who to contact. When you have somebody new that needs to learn all those things, it's not that they can't. I think it's just a longer, startup period to get them trained. You might even see, even with remote working, you might see, people have to come into the office for, I don't know, a training kind of, I won't call it probation, but more a training mission so that they know what's going on with the company, know who people are and things like that.
Okay, thank you. And Sean, what's your perspective on that? What will you continue doing remotely, and what things will have to go back to in person?
Right, that's a great question. And I think our entire industry is right now dealing with that, is what is the new norm? How many people are not going to be comfortable coming back into an office environment where we have something of a bullpen area, where we have, staff literally shoulder to shoulder. So we're going to have to invest in some plexiglass to begin with, right? Yeah. So if we can find the plexiglass. So those are one of the winners that we talk about. So there's a saying, where there's disaster, opportunity arises. And we see a tremendous amount of opportunity for us to expand services and to do a lot of things that we weren't able to do before. For instance, even though we're working remotely, before we were working remotely, it's like, okay, who used Zoom? I mean, we didn't. We were barely using Teams the way we use Teams now, right? It's a Microsoft product. Now everybody's using Zoom. So clients have become more adept, and it's easier for them to contact us. We can say, look, let's have a meeting. Let's get there so we can at least see each other. Now, we're not going to give high five and hugs anymore, but at least we've got that visual. I'm very fortunate to work for Kaufman Rawson's because, look, we were in South Florida, so we had to be able to work remotely. Irma actually had taken out some of our servers that were on the bottom floor. We thought everything was great, but come to find out there was one critical server that didn't get moved up to the cloud. And of course, when Irma hit, it flooded us. So we then took action so that would never happen again. So we were able to very quickly move to a remote setting. So because everything is cloud-based. So the problem and the challenges with that is that interaction, that spontaneity. I do miss people. I do miss being able to sit next to the staff and be able to talk to them and be able to train them. And there's something intimate about that makes a bonding that we will never be able to do that over the screen, right? It's like trying to give you a haircut over the phone. It won't work, right? So that's a balance. And right now we're trying to stay in touch with our new staff and bring them on board. And you know what, we're planning on hiring again. I mean, and that will be our next challenge, is how do we absolutely, truly onboard the next group without any type of interaction, where you can't sit next to them. You're going to have to do a screen share. You're going to have to teach them, you know, how to work in this type of environment where they were thinking they're going to come to an office. So we don't know when this is going to end, right? And if anybody can tell me, please, it's $1 million question. We'd like to know, but we don't foresee our tax season. We're coming back into the office. And so that starts in January. So that's going to be a real challenge for us to be able to push through. And we just finished with 9/15, and that 9/15 was not real fun. That was a lot of problems for us. So we do see that as it will be a challenge. However, we've done you know, less with more. So at this point, we think that we're going to be able to manage it. It's because what we have to do, right? Nobody thought we would be going to a university on a Zoom call, right? But we are, and the kids are managing. I call them kids or young people. Anybody younger than me, I call them my kids. So the kids that we bring in, I'm telling you, they're highly technically trained. They grew up with that iPhone in their hand, so they know the modern technology. So it's not really an issue of, you know, understanding how to work remotely. It's more of the culture. How do we get them embraced in our culture moving forward? We're working on it, and we're doing a lot of things, and some things are sticking, some things aren't. And I imagine, you know, Monica, they're doing the same thing as a firm, trying to figure this out. And all in all, I can tell you, it's people at this point, we're all very thankful again and grateful for what we do. We're in the greatest profession in the world. It's the accounting and tax profession. As someone said, look, whether it's black ink or red ink, you still got to count the ink. You still got to get the financials, right?
Yeah, well said. Yeah, and yeah, Monica, can you please share some insights about Ernst & Young with that respect?
Yeah, absolutely. And if I go on mute, it's because my fire alarm just has started going off intermittently. So go to another panelist, but I'll try to get my words in before it goes back on. So at Ernst & Young, we really look at this about the future of work, and really what is the future of work going to look like. And one of the things we're really focused on right now is just how do we make sure that when things level out and we get to that future of work, that all of the good things that we've tried to do in regards to flexibility and work-life splicing and the different values that have been like the positive impacts of COVID, where our employees and our professionals are really trying to make sure that they're setting those appropriate boundaries between work and life, which is very hard, but people are trying to do it, that we continue along with that. You know, our US chairman has said it's unlikely that we'll reopen offices until early 2021. We are looking not to reopen our offices until we have like at least a 28-day decline in cases. So I think we're saying that because we're in accounting and we can do this, we're just going to do double the CDC recommendation. So if CDC is 14, we'll look at 28 days. So we're really trying to figure out, when will we reopen, and when we reopen, what will that look like? If we have 600 professionals in South Florida between our offices, sorry guys.
Yeah, while we have fire alarms going on, we have another CPE question popping up on the screen. And also, I encourage our participants to ask questions through the Q&A session, since our session is almost towards the end. So we want to have still a couple of questions from the audience. So please type your questions in the using the Q&A button available at the bottom of the screen. Okay, so and you, Monica, you let me know when the alarm is, or it's still going. Okay. So so while we are waiting for Monica to finish answering the previous question, I want to ask a question that is probably of interest to many students who are graduating or will be graduating soon. Do you guys think that the skill set needed to be successful, relevant in the profession has to change, or there are some skills that will make students more successful in the near future? David, if you don't mind starting with that.
Sure. I definitely think technology skills are the future. I don't think that's a requirement today, but to your point, Khrystyna, it's definitely something that will make you more successful, make you more valuable to accounting firms, industry, but right now I don't think that's I would say that's what we would call a preferred skill, but not a required skill. We look mainly, especially in the tax side of corporate, but just in corporate in general, we look at either accounting firms or other industries for that they have expertise in those areas. Those are the two places, the main places we hire. We also hire from the colleges with with interns and staff, and the interns a lot of times will come on board, but we're typically looking for that expertise. When you come to a corporation more than a public accounting firm, we're expecting that you have skills already to do a lot of the jobs, as opposed to in public accounting, they're hiring every year the bottom layer, and you're moving up through the chain, excuse me. So part of it, like I said, I don't think it has changed yet, but industry is more of as we get people from places that have these skills, we look for them, and we're definitely looking for the technology skills. I would say that we've been, I just hired an intern this summer, and one of the things we were looking for is we're doing a lot more automation and analytic type stuff on the tax side. So we were looking for people that had Power BI or Alteryx kind of skills. It wasn't a requirement, but it was definitely something, that a lot of more, established tax people don't necessarily have, and a lot of college students have. And it was valuable to us, and we ended up, hiring somebody with those skills, and it's, been helpful. But, if somebody might have been better, we might not have, not hired that person just for that skill, but it's definitely something we're starting to look for.
Okay, thank you. And Monica, if you don't mind, I will go back to you. So if you have something to add on the previous question, or you have some thoughts on this question.
Absolutely, and I apologize to all the participants for that. I didn't know they were testing the fire alarm today, but I guess we have to be agile. So on the other question, we were talking about the future of work. I think as auditors and even tax providers, we work, from our office or remotely at our client's office. So for us, not only do we have to have, like, each accounting firm, EY and others have our procedures and policies in place to have like a full return to work, we're also very reliant on what our clients' policies are. And a lot of companies, auditors or tax providers are still in the contractor bucket, and that's their last phase. So we do have clients that are saying that they probably won't invite us back on site until the spring in 2021. But with that being said, we've onboarded, first year audit clients, and we've done their audits 100% remotely. And, while it probably wasn't as efficient as we would like it to be at EY, it's been effective. And we've been able to work with lots of different companies, to execute on that. And I'm sure on the tax side, they're seeing the same thing. While we do want to be there face to face and we want to have those one-on-one and in-person discussions, and sometimes there's tough discussions and confidential discussions that need to be had in person, a lot of the work can be done remotely and will continue to be. And I think that's something, we can look forward to, is just looking for the future of work and how it will be much more interrelated with your life and your personal life. And now, like when, as long as you get your work done, we're never asking anybody, what they're doing. You can free to share, what you're doing outside of work, but we're not evaluating the merits of why people need time off. And I think that's very important in just a whole future forward mentality, is everyone's personal situation is different, and your work is going to work with you irrespective of what you want to do outside of work. So I think that's, as we return to work, will be a positive. People will feel more free to take that time off when they need it. But I do see we probably need quite a few more things, at least in Florida, with the direction the cases are. And likely at EY, we're probably holding out for the vaccine to fully return to our, but more to come, and more to see. As it relates to hiring and professionals joining the workforce, I love that you guys talked about your data analytics masters. That's the accounting, finance, and focus on that, because that's something we're really looking to do. We still primarily hire people that have audit and tax backgrounds, which is really the accounting majors, but we are also hiring people in consulting and in technology consulting. So other majors and things of that nature, there's jobs for them. Analytics is huge. We're working to do a lot of audit transformation in regards to the use of analytics, and we do use tools like Power BI and Alteryx. So understanding those, I think, is really great. And as young professionals are thinking of what can I do in my spare time, it's can you get any of those certifications? We're also really looking at like transformative leadership and who's going to be the next leaders in our firm when we hire right out of college. We kind of expect people to come with a new attitude about transformation. And as we're transforming our practices and as professionals, I think being, agile and resilient is one of the things we start to look for. Some of those skills are learned over time, but I think if you're a young professional and you're about to enter the workforce, you've now ended academia in a time of tremendous uncertainty, and you probably have the resilience that companies are looking for. At EY and at other large firms, because it is an apprenticeship model, so many of the skills are learned on the job. So it's really still about coming with, the basics of accounting and then building on that. So to kind of piggyback on what David said, like there is still so much on the job coaching. And, we did have a virtual internship this summer, which was 6 weeks virtual. I know we had a couple of participants throughout the US and the Americas. Also, we are hiring. We have, staff one starting in October 1st, and we're going to work through onboarding them virtually. Their computers are sent to their house, and lots of team meetings, but we'll work through it. And we think people are showing up very prepared based on the educations they're getting at great schools like the University of Miami.
Thank you, Monica. And Sean, do you have anything to add on that point?
Yes. Kudos to the University of Miami, because I tell you what, anytime we hire any of the young people coming out, one, they're ready for that CPA exam, and they take it and they pass it. That is such a big hurdle. So, kudos to the university, because the students come out and they're ready. They're tooled up. And as Peter Drucker said, you hire character and you train skill. Well, with Miami, you can get the skill. So really part of, of hiring into our firm, which has been around in South Florida since 1963, really is a culture. I mean, we're embedded there here, and we have a long history with a lot of businesses here. So we really want to make sure that somebody fits into our culture. Now, how do we do that remotely if we're not going to be able to get it? We can't have one of our famous parties where we're having, you know, alcohol and you really get to know somebody, right? So these things are, we're gonna work them out. We're gonna get back to the days of people. And that's what we talk about. We'll get back to the days of people, because in our industry, you really got to like people. And if you don't like people, then maybe we can put you in the back and you can twist the wrenches, and that's okay. I mean, everybody has a different personality, and that's what we do really well, is finding out that personality, where we believe that they can help us and where they can thrive. And our mentorship programs will put them in a spot for success. And so the training and collaboration portion that we see is very, very important. And you really have to be a team player. And we do these PIs, right? These are personal index, I believe is what they're called. And they're basically telling you if you're going to fit in to us, right? So you're going to take this test and you're going to say, look, this person is not going to fit into our culture. Now, don't get afraid. You know, kids should be frightened of it, because there's a spot for everyone, right? So we're not going to tell you you don't fit in to it because you didn't pass the PI test, but we got to understand where that person is at. And we take a really, really serious role in mentorship. Everyone who comes to us, we want to see them succeed. Their success is our success. We have a lot of good people who come from the University of Miami. Hopefully we can grab some more of those young people coming through. And so what we see as probably one of the primary, and just from the tax side, is really we hire ones with masters. You have to have a master's of tax or be into the program or be able to get into the program, and we'll work with you. If you're good, we'll take you, and then you're going to need to get your master's of taxation. We see that the communication skills, particularly the writing skills, the skills to communicate effectively to clients, to break down very complex laws and put it into layman's terms so they can understand it. That is a skill set that I think is more learned on the job than it is in the classroom. It's just because of you're not going to be able to, stimulate or emulate those types of conversations. So I do believe that the writing skills and the communication skills are very, very important. Now, the technology skills, high-end Excel has always been a mainstay. And speaking of our firm, it's like we hire a lot of people that really are not really accountants or part of tax people. We've hired mechanical engineers for the R&D. We've hired software developers to help us on our back office software to integrate our systems into client systems. And we're going to keep seeing that. I mean, we're going to see, this compression of technology very quickly. And what we see is the skill sets of being able to adapt. And so the young people coming into a firm, they need to be able to be adaptable, be able to learn, be able to be collaborative, and then be able to communicate. I think those are probably the top things that we look for in a candidate.
Thank you, Sean. And thank you, Monica, for answering the question that's the advantage of Zoom. You can answer questions by typing the answers. But if you don't mind answering that question so everyone else can.
Yeah, absolutely. So while like EY's physical offices are closed, like EY's virtual presence is strong. So we have been executing audits on SEC registrants that are fiscal year end, so 6/30, 9/30, or even the audits from last year, 100% remotely. And we've done it within the constraints and deadlines of our clients. EY has done a lot of things, probably similar to all other to enable working remote. We gave each employee a stipend to buy additional monitors. We're helping subsidize their internet connectivity, and really just working with all of our collaboration tools. So while our physical presence, like it's not that it's shut down. Like if I wanted to go to my office, I could. It's just we're in a work from home advisory that is mandatory at this point, unless you get special dispensation to go in. But we can do the audits, and we can do any tax services remotely or consulting services. And we have, invested in technology and people to ensure that. And, we work closely with our clients to co-develop a timeline to make sure we can, execute on our promises to them. I know on one of my clients, it was a first-year audit. It's SEC registrant. We took over the account firm recently, and we've done it 100% remote.
Yeah. Apologies about fire alarms, but it's a good sign, right? So we have another CPE question popping on the screen. Every time we have a fire alarm, there is a CPE question. So please take it. Take a couple of seconds to answer the question. And it's already 9:55. I hope everyone else was having a great time as I am here. I learned a lot today, and I would like to thank all our panelists for sharing these insights with us. And now I have, as a professor, I have a better understanding of how to do teaching, what to advise students, and in general, from the research perspective, I think I got a couple of research ideas for the future. So I would like to thank you guys for being with us today. And if you don't mind, I will now ask Miguel Minutti-Meza to give a few concluding remarks at the end of our forum. Miguel, are you still there?
Yes, I am. Thank you very much to all of you panelists, great remarks. I've done some research on going concern. Khrystyna has done research on going concern. Thank you for all the questions. I just want to remind all that in the chat, there is a link for our development page. If you feel like giving, we will be happy to receive your donations. And also, I remind you of two more things. Connect next Friday. We'll be here, same place, same time. And also, if you cannot attend, there will be a posting of all the webinars for future reference. So thank you very much, and thank you all for joining. Bye.
Thank you. Have a great day, guys.
Bye. Take care. Stay safe, right?
Thank you.
Yeah. Bye. Take care.